And why I'm telling that, I'm creating a vision document which will be shared with all the people after we get SEBI registration. In that vision document, I am calling it as reincarnation of India. So why I think that India is at a stage where it was at 1991. After 1991, liberalization, globalization, and privatization happened. And after that, we have seen a massive growth in stock markets. We have seen a massive growth in economy. We have seen huge wealth creation. Like most of the stocks, like even Maruti Suzuki, which has went up like 1000x. Most of the stocks, frontline stocks I'm talking now. I'm not talking even mid cap and small cap stocks. I'm talking about frontline stocks. So why 2020 is the year where I'm talking about? It is like 1991 moment, or why I'm thinking for the stock market perspective, why 2020 to 2040 is like period for it is like the same period from 1980 to 2000 US. So for that, we have to take these points. First is why stock markets, Indian stock markets will create massive wealth. India is the only country which has highest population of working age. Around 90% of its population is under age 60. So we are the global workforce. We are the global workforce, of which 35% is under 19 years old. So this trajectory is there, will be there for next 25 to 30 years at least. So that's the reason, one of the reason why I think that Indians will be creating massive wealth for the next 2 decades. Second is GST. GST bill was pending from long. I'm not a supporter of any government. Let me tell you, I don't I don't like any party at all. I'm only concerned with my wealth. So whatever I am talking here, it is irrespective of any political party. But whatever we have seen, and GST has brought in the formalization of economy, and it has helped to increase the tax revenue, no matter what people tell about any party and all. But it has helped the tax revenue to go up. Lot of people still are doing this tax terrorism, tax chori and all. But at some point of time, everything will be digitalized, and it will become very difficult for the people to come out of this trap. We can call it as a trap which has been laid down by the government to collect all the taxes. So people will not be let down. So GST is creating a big change. Demonetization triggered digitalization. Here again, I don't want to talk about anything whether demonetization was good or not, whether it was good for economy or not. But demonetization has triggered the digitalization of the economy. That digitalization, because that is when I believe in the numbers, I believe in the data. And I have seen how the valuations of Paytm surged during after demonetization time. And now we are seeing this Google Pay and even Amazon delivery to the smallest of the smallest corner. And this is, I'm talking about progress, nothing to do with any government. I'm just talking about what is being triggered by what. So RERA is one of the game changers which has happened. People are forgetting, and people try to connect real economy with the stock markets, which is a foolish thing to do. Why? Because stock markets in short run, it is all about liquidity. Is long in long run, it is all about economic numbers. And in when the liquidity is there, it can discount 10-15 years of growth. Markets are crazy, so never predict about market, where the markets are headed. But if you have, unless and until you have 15-20 years of means observation in the markets, we should not be there to predict anything, and we should not predict anything at all. So whatever here I will be talking, it is not about prediction. This is about seeing the various scenarios and what may be the scenarios. Even if the scenarios might not be good, still we should not be losing any kind of money. That should be the scenario. Heads I win big, tails I don't lose much, or tails I don't lose at all. So whatever we are discussing here, I am sharing with you a situation wherein for the next 5 years, if we are able to bet this, heads I win big, tails I don't lose. This is what I wanted to say, no matter what stock market does. So IBC is one of the greatest change which India has done. Promoters are now fearing that they will lose the company, and just because of that, Lot of people who were doing the wrong things that things will get stopped here onwards. Apart from that, urbanization, financialization of saving, Jandan accounts, privatization in defense, mining, banking, energy, coal reforms, Bharat Mala and Sagarmala. I have traveled across India. I have seen from north and south to west and east. I have seen West Bengal. I have seen this all these states from past 1.5 years. I have been traveling with means before COVID. I was traveling around India. I have seen how these things of road construction is going on in the entire country. It is going in a good way. I'm very bullish. I'm not only talking about from the numbers, but I'm looking at the entire thing, and I'm seeing a very big positive thing. The average road construction per day recently crossed 35 kilometer per day, which is one of the highest. So this is what the data says, and this is what I have seen. I don't believe in any government. Sometimes I was questioning this government's data, but I am seeing this from the traveling around country. So second thing, what you need to have is belief. So this Rakesh Jhunjhunwala. One thing, if you have seen, lot of people might argue that ये बंदा हर बार आता है एक ही चीज बोलता है, mother of bull markets is ahead of us, mother of bull markets is ahead of us. But I have seen him, means whatever he is saying and whatever I have observed, I can correlate the things. I'm not here bullish because Rakesh Jhunjhunwala is bullish. I am bullish because I am bullish myself. But people need confirmation. को लगता है ये बच्चा क्या करेगा? So people need confirmation. For you all, I am bringing this articles so that you can correlate the things. So mother of all bull markets is ahead of us. This is what Rakesh Jhunjhunwala is telling. This is the post of December 2015. Now, after Sensex Nifty record rally, Rakesh Jhunjhunwala says mother of bull runs is ahead of us. This is May 2019. So 2015 to 2019, 4 years. And if you open any interview of Rakesh Jhunjhunwala on any YouTube, you will see that from 2015 he has been constantly saying that mother of all bull runs is ahead of us. So why I am sharing this presentation today, that I personally believe that has started now. That's the reason why from 5-6 days I'm getting these sleepless nights. From not 5-6 days, 10-12 days I'm getting these sleepless nights, because whatever I have been studied, whatever the Vision 2025 stocks, I have put in the effort for picking these stocks out of 8,000 stocks. These are 7 to 8 stocks which I have been researching for 3.5 years. That moment has come to put in big money and to make the most of it. So Rakesh Jhunjhunwala, he has been constantly saying this from past 5 years. Now this is the first time he said it has already started. So lot of people were trolling him, lot of people were trolling on him Twitter, lot of people were trolling him on various platforms that ये बंदा हर बार आता है वही बोलता है, इसमें दूसरा क्या है? But people don't realize the things whatever is happening in the economy, how the work is going on in the country, and where the country is headed, and where the stock market are headed, how the market cycles are performing, how economic cycle is performing, and at where are we at this stage in a commodity cycle. So there are different cycles: business cycle, commodity cycle, market cycle, and economic cycle. When all this is the time when all four are converging. All four are converging. This is the time. This is the time where I'm telling I'm so bullish compared to past 13 years of my journey, because we hardly get all this cycle combining, and I am seeing a combination of business cycle, commodity cycle, stock market cycle, and economic cycle. These all cycles converging at one place, that is giving me that kind of confidence. And this maybe Rakesh Jhunjhunwala is also sensing the same, because recently in May 2020, why I was actually, even one of my mentee, Mr. Bhavesh, is there with us. He might know that I was not that kind of a person who would like to share this thing to all. I was doing this research for myself and only few core people. But at some point of time in March, I understood that what he realized, that I too realized, and that I communicated during my COVID webinars, that this is a lifetime opportunity. That one lifetime opportunity has already gone during COVID times to create 500 kind of money in many stocks in long term. That has already gone. But the second best opportunity is right now. And why I'm telling you this, I'll be opening that in few slides. So mother of all bull markets has started. He has already told that in May 20. After that, May 20, he told on November 16 that tsunami of foreign funds is coming. After being said that mother of all bull markets has started, he said in November 2020 that tsunami of foreign funds is coming. And this, even why I'm sharing this with you, because I have observed, and that's the reason why I could correlate what he is saying. But to tell you from the ACE investor's perspective and my perspective combined, I'm sharing with you all why I'm saying this tsunami. Even I believe that tsunami of foreign funds is waiting, and it has already started from past 10 days, 10 or 15 days. From past 15 days, tsunami of foreign funds has already started. So as I told you that to create massive wealth or to create fortune from stock markets, what you need is tailwinds. No matter what you do, if the tailwinds are not with you, there is no point in being in markets. You can do a lot of things, but still you cannot do money in markets. So this is what I want to tell you. So the last pattern, so if you let me ask you all that, have you gone through the basics of technical analysis? And let me ask you, do you understand this cup and handle breakout and rounding bottom breakout now? Yes. So why I had started this platform with you all is because I am sharing this video so that you can correlate the things. It can help you to take the conviction call. So that's the reason why I'm been sharing this. What is rounding bottom? What is everything? And so Indian stock market. This is the indices. This is the chart which I'm showing you is Nifty USD index. What is Nifty USD index? It is Nifty in dollar terms. So right now, if you are seeing Nifty at 12,800, if you convert that in dollar terms, this is Nifty in dollar terms. And if you convert it now, you will not get the right answer because the base may be different. So Nifty dollar index has from past, means from 2007 to 2020, it is 13 years. It has not given a positive return. For 13 years, it has given zero returns. You all know, you have all learned my learning on mean reversion. So whenever such big period of trough happens where there is no return, after that, whenever the breakout happens, there will be a massive rally that we have already seen in 2002 to 2004 period. So for 4-5 years, there was no return, and after cup and handle breakout, the stock market boomed like anything. So from 2004 onwards, from 2004 to 2008, Nifty US dollar terms has moved from 1,200 to 5,600. So within 4 years, 1,200 to 5,600 means it is equal to 4 times. 4 times in 4 years. 4 times in 4 years. It is about index. Lot of stocks has done 50x, 30x. Lot of frontline stocks have made 20x in 4 years. So that kind of massive wealth has created in Nifty. And why I'm discussing Nifty dollar terms now? Because even if you see Nifty is at all-time high now, and it has created all-time high way back in 2014. But in dollar terms, still Nifty has not created all-time high, because Nifty created all-time high after 2008 in 2014 after Modi rally. After Modi rally, do you all believe this? Do you all know this? If you don't know, just comment don't know, so that I can show you the chart. So this was the period. This is 2008. This is 2008. From 2008 till now, 2008 to 2014, stock market did nothing for around 6 and 8 years. For 8 years, it did nothing. However, after the breakout of 2014, after Modi won the election, stock markets made a new high. So this is the chart of Nifty index. However, if you consider the Nifty in dollar terms, so for foreign institutional investors, Nifty dollar terms, which is called as DEFTY. Lot of times you may have seen this DEFTY, and you may be wondering what is DEFTY. Lot of TV channels show it, DEFTY. So Nifty in dollar terms is called as DEFTY. So when DEFTY in dollar terms, it has not given a breakout. It is just now given a breakout. That's the reason why I told you all that next 40 days will confirm whether we are headed for 2003 to 2008 kind of bull market or not. So Nifty dollar terms. So from past 13 years, foreigners, FII investors have not made any money in Indian stock markets. FIIs have not made, buy and hold kind of investors have not made any money in Indian stock markets. And let me tell you one psychology, and let me ask you one psychology. When you will invest more, when you have seen whatever your advisor may be telling, whatever somebody may be telling, but still you will not invest more unless and until you get a positive return. Do you all think that? Do you all believe that? Actually, you should not only, means this is irrational thing, because market doesn't care what price you have bought. Market doesn't create what price you have bought. So Nifty in dollar terms, next 10 days, it has not yet given the confirmation. Next 10 days, month end, this month end will confirm whether we are headed for 2003 to 2008 kind of a rally or not. So it will, if the Nifty dollar index closes above this, it will give us a confirmation and a breakout. And the psychology itself tells that foreign institutional investors, the investors of a fund, let us say Franklin Templeton fund, which is investing in India, their investors in US will invest only and only in that fund only when they see positive return. If there is an India specific fund, that fund will get more inflows when they will be seeing positive return. So this is the time. There have been 2 attempts where it tried to break out of this, but it was a false attempt. Next 10 days, this month end will confirm whether we are headed for that kind of a rally or not, or maybe in the first 10 days of even December. So it might take one more month also. So this positive thing, so whenever we will be seeing that positive thing, that has happened here. Whenever that breakout happened in 2004, after that index went up 4 times. So what the technical suggests, we are headed for rounding bottom breakout in Nifty US dollar terms. So the potential upside for this pattern is what we have to do. We have to add the size of the trough. This is the trough. If we count the size of the trough, and this is psychological chart, always talk about the possibilities based on the psychology. It tells you about investor psychology. So investor psychology, if you see, size of the trough is 4,000, means the size of the trough is 4,000, and if we add that to the top here, it will give us the potential upside 1, which is 10,000, which is Nifty in dollar terms will be 1.6x. Potential upside 2 will be 20,000, it will be 3.3x. That, and the pattern potential, what we have to do is we have to catch this 2 and divide it by 3, the total time period. So what, in how much time frame it might happen? It might happen in 4 to 6 years, which means what I am talking about, Vision 2025 holds true. And this is only about tailwinds. Even without tailwinds, we will not be losing money. With tailwinds, we will be creating huge wealth, unimaginable. Why I am talking unimaginable? The people, let me share you all. I have seen some people always complaining about something. Every time, each and every time complaining about something. Do you think that Rakesh Jhunjhunwala complains about everything and all these years? We will be seeing some tough times. We will be seeing some bad times. We have to come out of that. And that's why you have chosen me as a mentor. So I have seen a lot of people when we have lost, and I have always told in the webinars that we will be doing the mistakes, but we have to come out of that. And ultimately, what we do is more important, because this is how the investment journey. And if you have to create fortune, it is not a single line curve, means single line growth. So the people who have been following, have already come out of that trough. 100 became 75. Now we are sitting at 85, 90. So for some of the people who did it right, who are not doing right, that is, I have given the clear strategy what to do. So the people with complaints will never come up, and it is not. It will not happen even having a good mentor if you are not able to follow and if you are not able to mend. So the reason for that is, greatest of the greatest investors never ever complain about anything. It is all about learning from the mistakes and moving forward. And the people who believe, we are already on the path with Markson, already up 13-14% with 80% of the capital invested. So even from this journey, even if we are talking here in this total presentation, the journey from 2020 to 2025 will not be in straight line. Let me clear you, because see, Rakesh Jhunjhunwala, when he invested in Titan, his 100 crores becomes 100 crores. I'm just talking you in a, the number might be different, but I'm talking you in terms of percentages. So 100 crores might have become 13 crores because stock went up 65% down. It is about long term. I'm not talking about short term. From 30 crores, it went to become 400 crores. From 400 crores, it went to become 100 crores. From 100 crores, it went to become again 1000 crores. From 1000 crores, it came down to 400 crores. From 400 crores, it went to 8000 crores. So long term investing is not easy. That much conviction we should have even after seeing such drawdown, what the business we are having and what are we are able to see. So do you think that you could have been able to hold in Titan for so long after seeing such kind of drawdown? That requires near pure conviction. Without conviction, we cannot do anything. Even if you have a greatest of greatest advisor, greatest of greater mentor, effort should be put in from the both ends. So why I'm talking to you here, so journey from this, I am seeing what I am seeing. Index will do its own part. We have to do our own part. What part we have to do, I will be sharing that in the upcoming slides. So index itself, I am seeing, looking at the dollar potential, Nifty USD. Nifty potential number 1 is 19,000. Nifty potential number 2 is 39,000. So whatever the Sensex we are seeing right now, we are here in a position. If that breakout happens, we will be seeing the Nifty where the Sensex is in the upcoming 5 to 6 years. Sensex potential number 1 is 64,000. Sensex potential number 2 is 1,32,000. Looking at the dollar index, and dollar, there is gush of liquidity around the world. Money is waiting. Money is waiting to come in India and all around the world in all commodities. I will be talking about in the upcoming slides. And why I was talking this from past 2 years. One of the mentees here with us, he will be sharing that his story from past 2 years, whatever I have been saying, now that it is coming true after 2 years. So it has taken a big conviction to come out of that tough time and to be there. That requires conviction. I will be sharing that conviction with you. And if you are able to develop that conviction, only then fortune can be created. So a lot of times when I talk to the people, the so-called Gyanis in the markets, means those who think that after being in markets in 3-4 years and 5 years and 7 years and not having spent enough time, when they are talking about Nifty PE being high, let me share you that PE is always misleading. PE is always misleading. I never look at PE at all, market PE, because let me share you this learning with you why one should not look at PE. I will be telling what to look at. So Nifty at all time high, Nifty PE at 35. Should you be worried? See, Nifty PE, price to earning. I have shared in my basics of fundamental analysis course, price divided by earning. How it is calculated? Price divided by earning. So Nifty PE to go down, either price should be low or earning should increase. Either price should go down or earning should increase. Denominator should increase or numerator should come down. Only when the PE will be down. So right now what has happened? Earnings instead of going up, how can you expect Indian economic businesses during the lockdown period that earnings should increase? So earnings has gone down, and what has happened? Prices have went up, and because of that, this ulta, we are completely seeing Nifty PE optically high at 34, and Gyani is told that at 28 PE you should sell the Nifty, which means at around 11,000. I'm not talking about even 12,800. At around 10,000, Nifty PE was at around 28. So if somebody would have followed Nifty without understanding the shortcomings of the PE, they have not created wealth, and that's where they have missed the big bus. I've seen a lot of YouTubers talking that earnings खराब आएंगे, मार्केट गिरेगा, ऐसा होगा. बहुत सारे यूट्यूबर्स का मैंने वीडियो देखा. So one thing we have to see, PE is always misleading, and that's the reason why earnings has went down, and that because of that PE is optically high, and PE will be optically high for India. Even during the lockdown period, it never came down below 18. So that's the reason why we should not look at PE. I never look at PE at all. Now what we should look at? So PE earnings changes quarter to quarter. So if the quarter to quarter, on the base of quarter to quarter results, and that is the reason why I don't look at quarter to quarter results also, because from one quarter, if you are changing the sentiment or changing the view of a business or a country, it means something is wrong with us, because countries are here, will be living here for hundreds and 50s and 100 years. So looking at just one quarter is not good. That's the reason why even looking at two quarters is not good. So when we are having the view on markets, when we are long-term investors, now here I'm talking about investing, not about trading. So we should have that conviction, we should have that deep understanding. Nifty PE is always misleading. So why I'm saying, even at this all-time high levels, why I'm saying that we are at the stage where 2003 was. So from 2003 to 2008, in 5 years, markets went up 5 times. So on September 2, 2003, price to book of the Nifty was 3.1. Price to book of Nifty was 3.1. 2008, after which there will be small corrections. There will be small corrections. There will be small corrections in between, and we are not worried about correction. We are worried about bear markets. So why we are not headed for bear markets very soon? I will be telling you all that. So Nifty down range was, Nifty price to book was 3.1. Why I consider this is the one of the most what I say indicator which I look. I never look at PE, but I look at price to book, because book value only changes after a year when the annual reports are published. So I am talking about Nifty price to book value, means combined 50 companies price to book value. So price to book value in September 2003 was 3.1, and when it made a top at 2008, it was 6.8, very much expensive. It means 100 रुपए की कोई चीज है, वो बाजार में 6 गुना ट्रेड करेगी. 100 रुपए की चीज, 100 रुपए का एसेट 6 गुना बाजार में ट्रेड कर रहा है. Now, if we look at the Nifty price to book, and if you can correlate this, now we are at the mean, 12-year mean. We are at the 12-year mean. अब तक जो कुछ भी मार्केट बढ़ा है 2014 से, ये महंगा क्यों नहीं है? Why Rakesh Jhunjhunwala is saying that mother of bull markets is ahead of us? Because of this reason, we are at the mean. अभी तो जो कुछ भी हुआ है 2014 से मोदी रैली के बाद, ये सब ट्रेलर है, ये सब ट्रेलर है. Why I'm saying that is we are at the mean now, because mean is around 2.8 to 3.1. And in my webinars during COVID, I was talking that once in a lifetime opportunity if we invest here in COVID time. During COVID times, the price to book was 2.1, which was same during 2008 fall. And we have seen what the results are. We have already seen that Steel Authority has doubled from 21 to 40 now. I shared about Vision 2025 during those. Sandur Magnesium has moved up from 350 to 6, 700, 800, 900 now. And apart from that, IDFC First Bank I shared at around 1920 rupees. It is at 35 now. Lot of stocks have doubled. That was once in a lifetime opportunity, and that I shared on my YouTube channel. Even taking continuous webinar during lockdown period. So that was once in a lifetime opportunity. Now this is second kind of lifetime opportunity, looking at the foreign funds coming. So that discount you will not get now. If you are expecting COVID prices, that is not going to happen, because once in a lifetime opportunity, that big opportunity has already gone. Now this is second opportunity which I am sharing with you. So that's the reason why I tell that markets are not expensive, and mother of bull markets and tsunami of foreign funds are ahead of us, and I endorse Mr. Rakesh Jhunjhunwala's views. So we are at 2003 period and liquidity is huge. So if 2003 to 2020 is same, so what is in the store for us? So here 2003 it created a breakout, index went up 5 times in 5 years. 5 times in 5 years, because the pattern potential was 2x, but pattern potential equals fundamental potential, and above the first pattern potential, whatever it comes, it is all pure craziness. So money is made not on fundamentals. Money is made in stock markets on crazy things happening in stock markets. Big money, big fortune. Rakesh Jhunjhunwala, Warren Buffett, these all people become big not because of fundamentals, not because of research. They have become big because of craziness. Do you believe the craziness in the markets will create outsized returns? So fundamentals, if Steel Authority of I think become 10x, but craziness can give us 100x even. And I'll be telling you all, you will talk me as a crazy person that what the bullshit he is talking. So I'll be sharing some examples. You will also be convinced that money is made in stock markets not because of fundamentals, not because of technicals. It will be made because of craziness and tailwinds. So let us go forward. So index itself is poised for a big up move. 1 lakh in Sensex will be soon a reality. So Nifty has achieved all its technical upsides till now. This time is no different. See, the first Nifty technical upside was from 2003 to 2004 consolidation. It created a cup and handle breakout, and after cup and handle breakout, the upside was 56% that it achieved within 4 years itself. Nifty had achieved that upside potential. After that, again it created a breakout after 2014, after Modi rally. It created a cup and handle, and after cup and handle breakout, it went up. The upside potential was 63%. It actually went up more than 100%. So this is the minimum upside potential which I am sharing with you. So right now again it has created not a cup and handle breakout, but it has created rounding bottom breakout. So cup and handle or rounding bottom, any breakout is okay. So rounding Nifty has created a rounding bottom breakout on Nifty charts, and that's the reason why I'm not bothering about the breakout on Nifty USD, because Nifty itself has created breakout. It is a clean breakout on Nifty, and that's why I'm not looking at clean breakout on Nifty USD, because that has already proven in past 15 days. Sorry, 22,000 crores has already come in. But still, I have never checked about US FII funds. But hereafter, after a long time, I'll be checking about FII's funds for the next 15-20 days, and then I'll be, and without doing anything, we will not be losing money. I'll be telling you about that, how it is that. So many beliefs will be broken hereafter. I have seen there are a lot of value investors, so-called value investors, which have came in India. Value investing doesn't work all the time. Let me tell you, some of the people who are practicing it, who are already practiced it in past, they must understand. If they have understood this, please comment. Value investing always doesn't work. I think Ankur might be able to answer this, because he has been a hardcore value investor. Value investing doesn't work all the time. It has not worked in US for long periods of time, like 15-20 years. So that doesn't mean value investing will not work. There is a period where value investing works. So I have recently seen from past 1.5 years that there have been a lot of articles where people are saying that value investing is dead, and that is where value investing takes birth, because the same thing happened during 1975 US, 1978 US. A lot of people talk that value investing is dead, and only after that rebirth of value investing happened, and from 1980 it created a massive wealth for value investors. Even during the Great Depression, after Great Depression, a lot of people thought that value investing is dead, but again Benjamin Graham created huge wealth. So from past 10 to 12 years, value investing has not worked around the world. That is the reason why it will work now, because there is a period when growth investing works, there is a period where value investing works. Past 10-12 years has not been a good decade for value investors. Value investing means buying something at 30 or 50 rupees. Deep value means buying something at 20 rupees, which is valued at 100 rupees. And I am, whatever the Vision 2025 stocks I am buying now, it is deep value, not value. Value is buying 100 rupee note at 50 rupees. Deep value is buying 100 rupee note at 30 rupees or 40 rupees, something like that. A big discount. And if value investing can create 10x, deep value investing has the potential to create 15x, 50x, not 15x, 50x. So beliefs that will be broken hereafter will be, is value investing dead in India? So that belief will be broken. Reasons for that I will be telling you why it will be broken. Second belief, the people who are saying, because the simple reason for that is mean reversion. Mean reversion is imminent. Mean reversion is imminent. If you have gone through the video of my mean reversion, if you have understood the mean reversion, just comment in the comment box. If you have not understood it, called as not understood, I'll share you the video after the presentation. Mean reversion, I've shared it many times. If you have not understood, please comment. I'll share that after the presentation. So mean reversion is imminent, and this PSU from past 12 years has not created any wealth. And even mutual funds are telling government-owned companies were the biggest destroyers in the last 6 years. This is what mutual funds told. So PSUs not creating wealth means these are one of the hatest category, and these were the hatest category in 1999 period. Steel Authority was trading at 4 rupees in 1999. It went to 280 rupees. From 4 rupees to 280 rupees, which is equal to 70x, 70. Within next 8 years, in 8 years it went up 70x. This was the same public sector enterprise. And before that, in 1995, Steel Authority was trading at 55. From 55, it came down 90%. And that is when in 1999, people were telling PSUs are biggest wealth destroyers. But that belief got broken, and who invested in Steel Authority got a big lottery in making it 50 to 70x. So do you think that Steel Authority business went up 70 times? Do you think that Steel Authority business went up 70 times? It is not like that. So it is all about craziness and being at the right time at the right place. So I am here telling you what is that right place and what right time. So we are talking about right place. You already know it is Vision 2025, but right time is now. And when we are taking this presentation, the reasons I have already given, the beliefs that will be broken. PSUs are wealth destroyer. This belief will be broken.